We've made it to the fifth and final step to account for our office suite operating lease. We need to tackle the monthly subsequent accounting. And we already have everything we need to do that. All we have to do is add our new lease to our journal entry list and make a few small updates because this is an operating lease rather than a finance lease. So to begin, let's copy down our journal entry and update the identifier to 2.0. Then we need to point our formulas to the 2.0 worksheet instead of 1.0 worksheet. And we'll use Excel's find and replace to do this quickly. So we'll highlight the formulas we want to update, and we'll find 1.0 and replace it with 2.0. Then the only other change we need to make here, if we look at one of these formulas, you'll see we lock that date cell, and we're still looking up the date from our 1.0 journal entry. This really isn't that big of a deal. Both of these are pointing back to that reporting date input, but I'd prefer to keep it consistent, so we'll do the same thing where we find the E7 cell and replace it with E17. Okay, and you can clearly see everything here is 0, but that's because our reporting date right now is January 31st, 2026. Our office lease didn't commence until February 1st, 2026, and the first reporting date is February 28th, 2026. So if we update this to February 28th, you can see everything now pulls in correctly and we have our February month-end journal entry. There are only a couple of minor updates we need to make. First, we need to change our interest expense and amortization expense to operating lease expense. Precision Industrial's operating lease expense account number is 6800-0000, and the name is operating lease expense. So we'll copy that down to our amortization. And I know I've said this many times, but remember that for operating leases, we present in profit and loss a single straight line lease expense. And the amortization of our right of use asset is the straight line lease expense less the imputed interest calculated using the effective interest rate method. Now you could certainly combine these two lines into one in the journal entry, but I prefer to keep them separate so we can see the contribution of each component. It makes it easier to audit and track down any potential items later if we need to for any reason. But if we quickly sum up our total lease expense for the month, we get $4,099.33, which matches the straight line lease expense we calculated in our lease tracking workbook. And to illustrate, if we update our reporting date to March 31st, you can see our operating lease expense remained constant at $4,099.33. So we'll switch that back to February, delete our straight line lease expense here, and the only other thing we need to do is update our account types. This is not an equipment lease, it's a building lease. So our account number for building lease current is 2300-0000, and the name is building lease current. Our long-term account is 2600-0000, and building lease long-term. And finally, the accumulated amortization for our building right of use assets is account 1400-0001, and it's called accumulated amortization building right of use assets. And with that, you can now see how efficient we've made things for ourselves. With our first schedule in place as a template, we were able to quickly set up the tracking for our office lease. And now, moving forward, our periodic subsequent accounting for both leases is as simple as updating the reporting date and entering the journal entries we've calculated here. So speaking of entering journal entries, we'll see something new here. So let's go make our monthly entry for February 2026 for our office lease. Right now, as of month end, our balances are still reflecting our initial measurement. So let's first act as our accounts payable team and make the cash payment to the lessor. So we'll create a journal entry, and the date's already February 25th, 2026. Let's say that's the day that we remit payment to our lessor. If we look at our invoice from the landlord, you'll see we have both the lease payment we need to make in advance of March and the estimated CAM charges for February. So as the accounts payable team, we'll do as we've been instructed and code this entire amount to our clearing account. So the debit will be to ASC 842 clearing for $4,645, and the credit will be to our checking account. And then if we save and close, you can see our balance sheet is now reflecting that balance of $4,645. Now it's our accounting team's turn to perform the ASC 842 journal entry as part of their month-end process. So let's first make our entry based on our lease schedule. This will occur on February 28th, and we know the first thing we'll do is credit that clearing account for $3,800, the amount of our monthly rent. So we'll first debit our operating lease expense. This is for the interest portion, and that amount is $1,172.52. Then we'll credit our current building lease liability, and that amount is $292.40. Then we'll have a debit for our long-term liability, and that's for $2,919.88. Then last, we'll add our operating lease expense again. This will be for the amortization component, and that's a debit of $2,926.82. And we'll offset that to our accumulated amortization for the building right-of-use assets. And if we save and close, the first thing you'll notice is our clearing account isn't yet zero. But let's come back to that in a second. First, you can see our building right-of-use asset and our building current and long-term liabilities match our schedule, just as we'd expect. But back to that remaining balance in our clearing account, we clearly have some remaining work to do. And if we look at our invoice, you'll note the $845 is the exact amount of our estimated CAM charges for February. And because we've elected to apply the practical expedient to combine lease and non-lease components for our building assets, these will be accounted for as variable lease costs. So let's handle those now. We'll create another journal entry. This will also occur on February 28th, 2026. We'll credit our clearing account for $845, and the debit is to our variable lease expense, which for Precision Industrial is account number 6810-0000. And if we save and close, you can see our clearing account is now zero. And if we look at our P&L for February 2026, you can see we have our operating lease expense for $4,099. We're off by 1 penny from our schedule just due to some rounding. And our variable lease expense for the CAM charges of $845. So at this point, we've now worked through all the basics of both a simple finance lease and a simple operating lease, and built a strong workbook to track each one. In the next episode, let's move on to some more nuanced scenarios, starting with multiple lease components.